Hey, how's everyone doing? I hope you're all doing great. Welcome back to the channel. Today we're going to talk about something that absolutely everyone is watching right now, Bitcoin. It has recently come back up to, or at least close to, the $69,000 level, and the big question is no longer whether it's gone up, but what could happen next from this point forward. In this video, we're not going to focus on news, clickbait headlines, or magical predictions. We're going to break down what really matters: price action, market behavior, and most importantly, what the big players are doing while most people are just reacting to fear and hype. I'm going to show you the key levels the market is respecting right now, why that $69,000 level is so important both psychologically and technically, what candlesticks and volume are telling us about the market's real intentions, and we'll also touch on something that almost nobody explains properly: institutional psychology, and why the market so often does the exact opposite of what most people expect. So, if you want to understand the full picture, not just whether price is going up or down, without knowing what's really happening behind the scenes, make sure you stick around until the end because this analysis might help you see the market from a completely different perspective. Let's get into it. Right now, we're seeing small bounces in the market, especially in Bitcoin, and immediately the usual narrative comes back. We're going straight to all-time highs, buy everything. The train is leaving and you'll miss it. And I want to pause that narrative for a second. Not because the market can't go higher, it absolutely can. But the problem starts when investing turns into picking an emotional side. Some people need the market to always be bullish, others constantly call for crashes and worst case scenarios, but investing isn't about being right ideologically, it's not about being optimistic or pessimistic, it's about managing uncertainty. For me, investing has never been about predicting the future with absolute certainty. That simply doesn't exist. It's about working with probabilities, thinking in scenarios, asking yourself, what happens if the market goes up? What if it moves sideways? What if I'm completely wrong? Because accepting that you can be wrong is probably one of the most professional things an investor can do. Nobody knows what's going to happen tomorrow. Not you, not me, not the biggest fund or institution in the world. And the sooner you accept that, the better your decisions become. On top of that, we are in a particularly complex environment right now. Markets are constantly reacting to interest rate decisions, bond movements, oil prices, geopolitical tensions, political decisions, and economic rumors. I always say it. I'd rather enter a bit later with confirmation than try to catch the perfect bottom because that's impossible. The goal isn't to be right once, the goal is to stay in the game. The market doesn't reward the smartest, it rewards the most consistent. A lot of people turn the market into an ego battle. They need to be right to prove their narrative was correct. But the market doesn't care who's right, it rewards those who survive long enough. So if there's one idea I want you to take from this video, it's this. Your money deserves a strategy, not an impulsive reaction. If the market goes up, we adapt. If it drops, we're prepared. Because investing isn't about hope, it's about having a plan. Less noise, more analysis, more risk management. And remember, the market isn't won by the loudest voice, but by the one who adapts best. And that's it for today's video and analysis. As I always say, it's not about predicting the future, it's about understanding probabilities. The market constantly leaves clues in the levels it respects, in the volume that appears, and in how price reacts at key zones. Our job is simply to learn how to read those signals calmly without being driven by emotion. Right now, we're in a very interesting moment for Bitcoin. We have clear levels, well-defined scenarios, and a market that could be preparing for significant moves if certain zones are confirmed. But remember this, something I say in every video: managing risk and having a plan will always be more important than trying to catch every move. If you enjoyed the video or got value from it, drop a like and subscribe if you haven't already. Take care, and I'll see you in the next one. Stay sharp.